Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey MJ traders, so most names saw some profit taking today after the huge day on Tuesday. We were looking for a green day with some solid volume to really stand out, to be something unusual. Instead, we got exactly what we were looking for as far as what our anti-FOMO was. So anti-FOMO at the end of the day Tuesday was, number one, these hourly charts have not consolidated, and number two, this looks a whole lot like December 9th. And if you want to see just how much CGC has mimicked December 9th, and I have not gone through and done this on every name, but before the gap up on December 9th, we started at 1852, we topped at 2168. We started at 1848, we topped at 2165. So a 4-cent difference from where we started, a 3-cent difference from where we topped out, and our higher low was 1982. The low of today is 1988, that's a 6 cents difference. The close on December 10th was 2009. Closed today, 2013. 4-cent difference. It's literally the exact same thing that happened December 9th into December 10th. If we're going to see it continue to play out this way, we can expect a daily inside bar tomorrow. If that does not happen, and if we see a break of 1988, the low of today tomorrow, we know this is not the same thing, and we would definitely still be looking for a daily higher low to form, but that would then break the correlation with exactly what happened on December 9th and 10th. If we look at the 4-hour time frame, what I would be anticipating on this move is an equilibrium now. We pulled back significantly enough to not anticipate continuation as the most likely scenario. Instead, we're going to anticipate an equilibrium as the most likely scenario. So we're scouting our higher low, but we didn't get enough information into the end of the day as to whether or not that higher low has been set yet or not. We ended the day with a 15-minute inverse head and shoulders attempt. This is the left shoulder, here's the head, here's the right shoulder, and we would have to see a bull break of 2040 to confirm the inverse head and shoulders on this 15-minute time frame, and for us to be confident and say, okay, our 4-hour higher low is now set if that level were to break. So that's what we're going to be watching into tomorrow. I did make one attempt at an entry today, and when you're looking at a gap and run, there's two kind of gap up opens that can have the bulls in control. First things first, we know that every single gap up open that we've seen since this oversold bounce has been for selling. And again, we just go back and go 1, 2, 3, 4, 5 now. 5 times in a row, a gap up open, you'd be better off selling. So any bears that entered today also did well. But if you see a gap up open, a gap and run is when you are looking at usually a news event. And off the top of my head, I do believe CGC did that on the Constellation deal. We had a gap up open, and then right when the bell rang, it was instant buying, and we just went straight up from there, and that was the low of the day. The more common kind of gap up open that results in bullish strength, which again is less common than sell the gap up open, but that's when you see a gap up open, a quick dip where there is profit taking, and then the buying of that dip offsets the profit taking, and you go from a quick low to the day to hit that new high of the day, and you don't break the low of the day from there. And again, off the top of my head, I do believe we did that a couple times on the oversold bounce gap ups that we did see as we saw follow through. So today I made an attempt for that to be the play. So I waited for the first few minutes of profit taking. I made an entry based off of, I think at that point it was 2112 was the low in the 21 teens, entered in the 2120s after 2% of consolidation. I said, all right, if this is going to be a move that is for real, we will see the low of the day hold and a new high of the day. So it was 2114. We hit 2114. We went back up to 2147. And then we broke the low of the day. And I stopped out right there for a small loss. And at that point, I said, okay, it is not the kind of gap up that then sees follow through. And it's looking more and more like the exact same thing that happened December 9th and 10th. And that kept me from making any more bullish entries today as I patiently wait now for clarity on the 4-hour time frame. Another thing to be looking at on the daily chart is this, actually I might like it better on a different time frame, is this a head and shoulders pattern? Let's look at the 12-hour chart. Trying to find the most clarity. So if this is a head and shoulders pattern, this would be the left shoulder, this is the head, and this is the right shoulder forming now. Is that possible? Yes. If we drop down and break 1850, it's a big red flag. The odds of a weekly trend change will drop significantly for me, and we are then looking at a lack of support, 1761, and then our low of the dump. That's a possibility. Is the weekly inverse head and shoulders pattern, which is a bullish pattern, is that still possible? Yes, it absolutely is, in my opinion. So both of those scenarios are possible, and that's why I, as a technical analyst and trader, am never going to box myself in by making predictions, because tomorrow I'm going to get a whole bunch more information that is going to help me determine whether or not it is likely that we're going to fade back down and break 1850 support. So tomorrow's going to be a pretty important day. Best case scenario for the bulls, aside from a very surprising break of the high of today, would be a daily inside bar. Bulls just want to hold 1988, trade around in the mid $20 range, and see a daily inside bar form pretty much exactly like December 11th. That's what the bulls want to see happen. Again, if we see otherwise, if we see a bear break of 1988 and some bear follow through, it's an hourly bear flag, and that would be a red flag. Still would expect a 4-hour high or low, but it would be a setback for the bulls. So that's big picture what we're looking at on the sector leader. Most of the other big Canadian MJ names are going to be looking at some variation of the same setup. Looking at APHA, again, gap up, big profit taking, close near the low, and taking off extended hours for clarity, but watching for a 4-hour equilibrium, and we're going to be looking for a 4-hour high or low to be set, ideally tomorrow, compared to 464. And again, if the bulls can hold the low of today, 495, and break 510, then we will have our 4-hour high or low set fairly quickly. Cron, same thing, 4-hour time frame. We're looking for a higher low compared to 658. Have to see this inside bar break bullish tomorrow by getting over 748 and holding 723 to say that our 4-hour higher low has now been established. ACB is different on its daily chart. It's a potential daily bear flag. The bears are still extremely strong on this name. 4-hour time frame, I would be expecting an equilibrium as well, but again, it's not the same setup as the other names we just looked at because of where we are coming from on the daily time frame. Bulls need to hold 202 and break 208 for the 4-hour higher low to be established. TLRY is the daily inside bar. We didn't even break the high of yesterday or Tuesday, so made it even easier for the bears. And again, I keep saying this, as long as bears get rewarded on shorting after bull moves, they will continue to do it, and they will continue to put downward pressure on any bull moves, and they will continue to make it hard for bull moves to get any follow through. And today's just another example of that. So TLRY needs a 4-hour higher low to form compared to 1557. Have to see a hold of 1633 and a break of 1661 to set that 4-hour higher low. Don't forget to use all the names in the sector for clues. You want to have all the major names up on your screen, because if I'm looking at the start of the morning and I see Cron and APHA break their low of yesterday while CGC hasn't done so yet, that's going to give me information that it's more likely that CGC is going to follow and break its low of the day as well. So the low of today and the high of that afternoon bounce, which is the high of the 4-hour candlestick that formed the second half of the day, are the two most important levels as we head into tomorrow. OGI, same thing. Need a 4-hour higher low compared to 220. Bulls want to hold the low and break the high of the 4-hour inside bar. Hexo, completely different setup. So Hexo is still a potential daily bear flag. Short-term resistance 167. We broke it by a penny. That's not convincing. There's a lack of resistance after 167. But if we're unable to get any follow through here, the daily bear flag is absolutely still intact. 160 is our higher low now. If we lose this hourly uptrend without getting significantly more follow through on this daily bounce, the odds of the daily bear flag will be high. VFF, it's already looking like a 4-hour equilibrium. So it's a bit different in that regard. We got the high low, lower high, and bulls are hoping that our 4-hour high or low is 596. Again, need to break 620 for us to be confident that is our high or low, but a nice 4-hour tightening range to be watching as we head into tomorrow. You can just see pretty much 3-4 days of wide ping pong action back and forth in the same range. Extraction plays continue to stand out for bulls. Today was another day where we see labs with a little bull flag confirming and getting follow through. New short-term support is 384 and resistance is going to be 418 and then 445. And the weekly time frame is looking more and more like an equilibrium. We would need big time bull volume to break 547 resistance. Otherwise, we will expect a lower high compared to that level. One note I forgot to mention, APHA, I gave the wrong date for earnings. It was incorrect on TradingView. They had it as the 9th. I believe it is the 13th as they press released. So a few more days before APHA earnings as to what I said on Tuesday. Other extraction plays. So labs, we're watching the hourly uptrend. We're watching the daily uptrend now with that little higher low. Bulls have space on the hourly chart and healthy continuation. Oils, new support level established here as well. We had support of 365. We held 3.7, broke resistance, and now anything above 3.7 maintains the hourly uptrend. When we lose the hourly uptrend, we'll need a daily higher low to form, and we're expecting that's going to happen sometime within the next few days just because of how extended we are from the low down at 265. But as long as the bulls keep the hourly uptrend, no sign of consolidation yet. VLNS, also continuation. 356 and 358 are the resistance levels, and we are now testing them. That being said, we are extended into this resistance test. So I would not be buying a bull break of these resistances, and in fact, I wouldn't be surprised for bears to try and make some entries tomorrow morning, even if just looking for a 4-hour higher low to form. But the 4-hour RSI is over 70. The daily RSI is right at the verge of being over 70. So just a bit extended into that resistance break. If you are cash and do want a position, waiting for either a rejection and a daily higher low or a bull break and then a daily higher low is likely better risk to reward. If you are already in a position, you're certainly comfortable. And the weekly trend change can potentially take place if we can get over 358. And we look at the monthly chart, and that's clearly a monthly bounce getting underway as well to start the year. IIPR, so we are watching a 4-hour equilibrium, and it's still in play. $73 held by a penny. We would need to see the bulls follow through over 74.16 tomorrow to stay in this equilibrium. Low, high, higher low, lower high, trying for a higher low. We need more bounce follow through. If we break 73, it's a bear break. The bulls will then have failed to change the daily trend, and the bears will have kept their control. Curaleaf, profit taking. So, decent little bounce on the initial sell-off first thing this morning. What we're looking for is anything above 703 to be a daily higher low. If we drop down, set a higher low at 740, try to see a bull move continue and fail, and then lose the daily uptrend, then we know we have a weekly equilibrium. If the bulls can keep the daily uptrend, they keep the possibility of trying to change this weekly trend. But again, with what distance is required of the bulls to cover here, they have to go all the way back to 937. I do favor an equilibrium as more likely than just a weekly trend change unless there's some kind of news catalyst. And it's the same for labs. Distance required to change the weekly trend favors an equilibrium as opposed to just a weekly trend change and bull break. So they're in the same boat, similar boats for weekly setups. CWeb continues to be weak. That one-day bounce did nothing. This is the second weakest close in a very long time, and I would have to see the bulls hold 955 and break 1031 for me to even raise one hair on my eyebrow to be watching what the bulls are doing. They're doing absolutely nothing, and the bears still have firm control of this current setup. TRUL, daily inside bar. If it breaks bearish, we know we're looking for a daily higher low compared to 1360. And if it breaks bullish, that means the move is not done yet. But what I'm going to be watching for is that lower high compared to 1650 and then a higher low and a tightening range. So Not your textbook equilibrium, but bigger picture, we know we're looking for a weekly lower high compared to $18. VFF with some form 3s after hours. Cron had some form 3s as well. I'll have to read that afterwards. With Cron, it looks like Cron was shifting from a foreign issuer to a domestic issuer, which I believe has to do with the size of the ownership that Altria has accumulated to this point. If you get past a certain threshold, you can no longer be considered a foreign issuer if the majority of your investors are in the United States. So in 2020, they're now a domestic issuer, and they had a bunch of Form 3s that were released on Tuesday showing that. And if you know more information or have any insight into that, I would welcome any posts and comments to read about that. IAN standing out in a huge way for the bulls. There is our pendulum shifting. So we have the scales of supply and demand, and supply has been outweighing demand on IAN for months and months and months, and that flipped on Tuesday with the daily trend change. And this is as good a follow through as the bulls could possibly hope for, considering what the rest of the sector did today with a ton of red on my screen. So at this point, the question now for the next 2 weeks on IAN is, can we change this weekly trend? And technically, it wouldn't be a weekly trend change because we did drop to a lower low, but only by 3 pennies. If we consider that a double bottom, can we break the lower high pattern by getting over 245, which is still about 15% away? Or are we going to reject from 245 and see the weekly inverse head and shoulders pattern? That's what we're looking for. We know at this point that the bulls have tons of space for a daily higher low to form when we top out. So if we were going to see a weekly inverse head and shoulders, in my opinion, we have to top out, set a higher low, fail to break resistance, lose the daily uptrend, then it would be a weekly inverse head and shoulders. So if we don't lose the daily uptrend, if we just pull back, form a higher low, and then see continuation, then 245 will be in sight. Definitely extended in the short term, and there's no notable bull volume behind this. Again, you look back here, and that was around earnings, but some of the higher volume days didn't see nearly as much bullish action, but clearly a big win for the bulls today. So the question is, can we break 245, or does the weekly chart have to consolidate before that happens? Bigger picture, monthly time frame, we will just be looking for a monthly lower high on this bounce. We could go up to $6 and still be in a monthly lower high pattern. So that's what I'm saying for the sector as a whole. Weekly trend changes are great. There'll be sentiment shifts of momentum, absolutely, but we can't lose sight of monthly lower highs as well. And the S&P 500 continues to be in absolute bull euphoria, crazy strength mode. OH consolidation after a gap up open. So we lost the hourly uptrend. Now the question is, are we going to enter an hourly downtrend? Are we going to form a lower high compared to 619 and then drop down and break 536? If we do, we will just be looking for a daily higher low to form compared to 440. CL profit taking as well, looking for a daily higher low compared to 726. And we knew that we needed weekly trend changes on both of these names, so we're not going to get overly bullish, knowing that weekly higher lows and higher highs will be needed, just like for everybody else in the sector. MedMen, weak bounce on the daily off of a higher low attempt. I need a daily trend change for a weekly higher low to be established. So anything under 91 is just a daily lower high. We have to top out on this move, come down and hold 56, and then see that higher low and higher high if we're going to have hope of changing the weekly trend. And again, even if you're an IAN bull, you want to see MedMen change its weekly trend. Sector needs to stick together. GTII looking for daily consolidation as well, overextended. Anything above 1032 is a daily higher low. Bulls have plenty of space to work with. And Harv, big dip buying. Let's see if it was at the end of the day. 425 resistance. If we reject from that level, I'd look for an hourly equilibrium tomorrow with the low and the high in the same candle. Lower high if we fail 425, and then we would look for a higher low compared to 377. But more notable dip buying than most individual names. And we haven't started daily consolidation yet, as we've seen a higher low every daily candle for the last bunch of days. Have to break that higher low every candle pattern to see a clear pullback for a pivot point for a daily higher low to then form. So again, recap, most names, low of yesterday, key support, low of today, key support, 4 hour top of this candle, which is the end of the day bounce resistance, key resistance for the bulls to break to give us 4 hour higher lows if those 4 hour inside bars do break bullish. And bulls would love to see quick dip buying and another green day tomorrow. Last thing you want to do is see one big green day and then a slow fade of giving it all back. And cryptocurrency traders will know what I'm talking about because Bitcoin has been notorious for doing that over the last bunch of months. Lack of follow through. So hope you're all well. Happy New Year out there. Hope you had a good time celebrating. And we will see how these weekly charts shape up in Q1 2020. And judging by how much time is left before APHA earnings, which is, if it's the 13th here, that now gives us 6 trading days or so, 7 trading days. So just looking at where APHA stands here on the weekly time frame, it is probably going to be up to these earnings reactions as to whether we can change the weekly trend or whether we reject with just another weekly lower high. And just looking at the daily chart, imagining what 6 candles could possibly look like in here. And in my opinion, it would need some kind of news catalyst to see that clear break in the next 6 days. Otherwise, I do believe people will be patiently waiting for earnings. Do good things. See you soon. I just realized my mic is unplugged. Hopefully my computer mic is not too bad.